So the story has changed. For a long time, we had this massive Fed umbrella. It didn't matter how much it was raining because we were under a Fed umbrella of massive injections of liquidity, artificially low interest rates, and that would stay forever. QE forever, QE infinity. Now it's raining a lot harder, not just economically, but geopolitically as well. And we are doubting the umbrella, rightly so, because that umbrella has been abused for such a long time. So I understand this nervousness, and it's not going to go away because inflation is a problem, and the Fed is going to have to react.
Jeremy Siegel was with us in the last hour. He said that he thinks the Fed is going to sound much more hawkish than even the market's anticipating on Wednesday, that Jay Powell will sound more hawkish, and that if he's looking at things, you could see the declines more than double what we've already seen. He was talking about the NASDAQ getting into bear market territory and the S&P getting well into, I think he said, correction territory. So if you're down 5.7% on the S&P, that would be well more than double what we've seen. Same story on the NASDAQ, which is in correction territory now, but not near bear market territory. Does that sound right to you?
So it sounds significant because it comes from Jeremy. What sounds right to me is that the marketplace doesn't quite know where the Fed is and where the Fed is going. If you look at analysts, I have never seen such massive dispersion in what analysts are saying, not only about what the Fed is going to do, but what the Fed should do. So the Federal Reserve has lost control of the inflation narrative, understandably so, because it mischaracterized inflation as transitory for so long. It has to regain it. And then the question is, how do you regain it? In my view, they need to be bold. They need to tell the market we understand that we have an inflation problem and we're acting. But most people don't think the Fed is going to do that. People think the Fed is going to be very gradual. And that's why you get this incredible range of expectations that actually undermines the market and undermines the economy.
I don't know I forget what the opposite of a virtuous cycle is, but that seems to be what we're in. And maybe this is psychology, market psychology at this point, where you're willing to look past a lot of things and really bid up valuations. And when the multiples kind of unwind, this is what you see. But there's been a lot of pain that's been inflicted because even though you're talking about the averages being down 5, 6, 7.5% last week, if you're looking at some of the individual stocks, particularly in technology, you're talking about much steeper declines. Does it really continue? Does the bloodletting really continue at this point?
Yeah, it's hard to tell because the technicals are confusing. Let me explain, if I may. Most of the time, it is the flows that lead to price action. So you identify the flows, and then you see the price action, and then you can make a judgment as to what comes next. This time around, the flows haven't led to price action. The price action have gone way ahead of the flows. We haven't had significant flows. Mike was talking about the credit markets. No flows there. Look at emerging markets. No flows there in a meaningful way. No reversal of flows. Now, the optimists will say that's great news. It means investors have faith in this market. The pessimists will say, be careful, because if the flows start happening, meaning outflows out of markets, then you get an issue. The biggest problem for investors, and you talk to Jeremy about it, is they don't know where to go. They may not like equities, but like you pointed out, a minus 7% real return on cash isn't attractive. The bond market isn't attractive. Cryptos aren't that attractive with the volatility. So they don't know where to go. And that's what's making us all feel uncomfortable right now.
So where should they go?
Look, it depends on your situation. And I say this all the time. I'm with Jeremy. If you've got money to invest, just wait a little bit. You may have better entry points. Otherwise, make sure that you've got a long-term view. I worry about the behavioral aspects, that people get kicked out of markets at the wrong time. But this is tricky. And it's only January, Becky. It's only January.